start of the year, there's been this friction between the market thinking that the Fed could be cutting rates sooner than the Fed's the rhetoric suggests. And I think we've still got this friction carrying on. Now, I think you're quite right. And I think most people have come to understand that that last little bit of services-led inflation, core inflation, could be the most difficult to fend off. Now, that certainly is a story, I think, for stock markets. But if you look at currency pairs, actually everybody is in the same boat. It's going to be very difficult for everybody, all the central banks, to get that last little bit of inflation down. So in terms of interest rate differentials, well, there's the same thread running through all of these markets. Now, I think if we look at Germany, for instance, if we look at the ECB, I could talk to you about the headwinds facing the German economy again, but actually German core inflation is looking extremely sticky. So certainly there is this expectation that the ECB will be hiking for longer than the Fed. But even so, recession risks, stagnation risks are very, very prevalent in the Eurozone right now. And that does suggest that at some point, probably as we move beyond September, the market will begin to believe that the ECB is done too. And that does put a different light, if you like, across the outlook for the euro.
Yeah, you spoke also as well about how other economies perhaps will reach that point a little bit sooner, right? You'll get other economies that are perhaps looking at cuts towards the end of this year, but very early next year as well, in anticipation of that number in inflation having dipped down quite considerably. Does that bring a little more upside then to the dollar, that it will end up recovering, particularly towards the end of the year and early next year?
Well, we don't think anybody really. I mean, certainly if you move into the emerging markets, you might have countries like Brazil, for instance, cutting rates. But in the G10 space, we don't really think that anybody is going to be cutting interest rates before the end of the year. So you've got this higher for longer story really for everybody. But certainly, I do think that there are the risks that we could come to the end of the cycle for so many central banks. I mean, what's really quite interesting this week is that one of the best performers, for instance, has been the Norwegian kroner, and then the Swedish krona have performed well. You've seen the issue related to currency weakness earlier in the year or last year really feed back through into higher inflation, and therefore the need for those central banks to do more. The yen, again, a factor here. We've seen inflationary pressures brought through the yen into import prices last year. We're now seeing signs of domestically driven inflation coming through from wages, and it's pretty exciting, I think, to wonder what the Bank of Japan is going to do at the end of this month. Is it going to tweak that yield curve control policy or not? Because certainly I think in the next few weeks the dollar yen trade is going to remain a very exciting one.